Morning traders, Paul here with GammaEdge. Today is Friday the 6th of January. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Summary for today. Yesterday we had another reset of the short-term timer. It was weak, but nevertheless, by the rules, it has moved to a new cash short position. Note we've been chopping for the last 2 weeks or so. It's prone to failure. We've more or less done the drunken sailor of 1 step forward, 2 steps back, or 2 steps forward, 1 step back. So just be aware of that. Long term, we are still in a cash or a short position. The slopes of the ribbon are downward. There is some change in that. I'm not going to get into it today, but we'll do a video over the weekend, and we'll talk a little bit more about what we're seeing in the Qs as well as the USC, the US composite. The right goalpost remains at 4,000. Actually, it exploded yesterday in net gamma, which is indicative of very, very short-term calls going in and just stacking one over the other on the 4,000 strike. Certainly, there is a group out there who think the bull case is intact and are playing for that upside. I will note the overall structure, though, is much, much weaker over the last 2 days, and it's going to be a struggle to hold the higher areas. But clearly, when you see the numbers, you'll see why 4,000 has just consumed all the air in the room for today. Minus GEX, which is our left goalpost, has dropped back to 3,700, and when you take a look at the last slide in the deck here, you'll see that 36, 37, and 38 are all of the same relative magnitude. We were at 38 yesterday. It's very possible we could move up, we could move down. Because they are of the same magnitude, you're really seeing the market play where they think in the short term prices are going to go. So we're really at a tipping point. We do feel that the progress over the last 2 days, where we are basically advancing and making a structure, has changed. We are now seeing long puts being added to the data, long calls being closed, and what we need to see is, just that continuation of the long puts being closed and long calls being opened, and we saw that negated yesterday. So be very much aware that we're right at a crossroads. We do think this is defensive ahead of the morning numbers here, so we'll just have to wait and see what happens there. We are below transition in the SPX. The transition's a pretty important range because it takes a while to plow through transition. It's very, very narrow. 38.50, 38.55 is the range. This is the second day that it is this narrow. Typically, when we see it so tight, we break one way or the other. We did drift down yesterday, which is bearish. We were not able to reclaim it. We really need to get above that 38.50, 38.55, and we also need to add OTM calls. So the speculators need to step up here, and we need to close the ITM puts above this area and really start developing that overhead structure to be supportive of moving towards 4,000 and points higher. So we'll see what's happening here. Of course, news today, which will be released at 8:30, and that'll obviously have an influence on everybody's trading. The market model, as I said, long-term downtrend. All the slopes are down. Weak failure here yesterday. You can see, down, up 1 day, down 2 days, up 1 day. Who knows what's going to happen. We are looking for a move upward. We'd like to get into the ribbon here and then eventually move to the upside of that to cause this to invert. It's going to take several days to do that, unless we just have a huge banner day today, which we're not anticipating right now. To the downside, very easy to do, so we are watching the cumulative tick in general, to continue the weakness into the weekend, risk off into the weekend. We have no idea. Nobody does, of course, but supportive-wise, the master trend over the long term is still bearish. We may rally, do a counter-trend rally within a short-term time frame, but clearly the long-term trend is still down, and everyone needs to pay attention to that. Key levels, here's that 4,000 strike unchanged, 3,700 from 38. The numbers are decisively more negative on the deltas, and what that means in general, is that more in the money puts have been added, and or more puts in general have been added, I should say, in their delta contributions, and calls have been closed, and it allows those numbers to go more negative. So just pay attention to that. Because of the anticipated news today, we have nearly a doubling from yesterday of what the open, high, low, close expected move is. So be aware of that. This is a very conservative value, so if you're a premium seller, take a look outside of these ranges. Because we can go either way, I would be, and we are in a downtrend, I would be looking north of 4,000, so even a little bit higher up. We may get some premium up there. I don't know. We'll just wait and see. Taking a look at the PM settled complex, we're going to have to move quite a bit with the news today. We do think there's a lower chance of closing above this unless we see a lot of action going in general. If we do see the basically all these in the money puts get closed because people are fearful that they're going to lose their profits, and we see some speculative calls go in, it could push us northward, and there is quite a bit up there at 4,000, which is not shown. I will note that the delta structure here has really changed. We were starting to see some basically some call values really start to emerge here. The puts were being closed, all the out of the money puts, and it completely reversed yesterday. So we've got some folks here who are clearly looking at the downside and speculating towards that area. 3750 is a short-term low range. Just be aware of that. Here's the 3800 line, and then that 3700 line, and this is in the PM complex. So all of these are potentially in play. And on the SPX combo complex, 3700 is the line, so you can see what the overall structure is and what the contribution is here from the PM settled complex. Taking a look at the 0 DTE, much weaker than it was yesterday. So when I say weaker, more favor to the bears, less to the bulls, right? So 3900 is clearly a line that will be of major influence today. So if we get close to 3,900 today, we could, until these are cleared. Remember, the SPX is cash settled and it's European, so these will be in play today. Here's that 3750, a lot coming off there, so we are losing some downside structure here today, so just be aware of that. Significant amount of gamma is vaporizing today. This is a big deal. When we take away the negatives, what remains is the positives. So this actually could be a stepping stone for the bulls. We'll just have to wait and see. Any move upward, these in-the-money puts will come off, exposing the calls. And then, of course, anything that moves away, the out-of-the-money puts, will also get vaporized pretty quickly, and people will try to protect any remaining extrinsic value that they may have. On the 1 DTE, which is our crystal ball view into Monday, you can see this 3825 line is very, very important. So first things being first, we need to see from where we are now, we need to see a retake of the 3835 into the close today. We do have upside resistance that's at this 3910. The contributions from the 0 DTE, which is here, and the 1 DTE above the 3900 is going to be very little, so it'll all flip over to what the trader action is today for overall volume, and whether or not we see those in the money puts get closed and out of the money calls get opened up, pulling us upward. This area right here is much smaller than what it was yesterday. And so I just want everyone to be aware that we are seeing that put dominant day over day. People are adding short-term puts. This is a 1 DTE for Monday. And people are just stacking on the puts. And when you stack on the puts, that's going to put a downside pressure on the overall markets. So until that sentiment changes, we need to actually see calls go in, which will have the reverse effect here. And we can watch that very clearly here in this delta column. In the combo complex, which is the AM and the PM, as most of you know, we separate these. There's a reason we separate them, because they do behave quite differently, although they're pinned, of course, in price. You can see very, very clearly, very narrow range here, and the gamma levels within that range are dramatic. What's even more dramatic is this net gex that's up here at the 4,000 strike. And I just want everyone to this is the short-term upside target for the bulls. Above this 39.15, 39.20, we see just, it's going to be difficult to progress up there today. To the downside, 3,800 to 3,700. You can see there's a lot of stepping stones at the half levels, even on the quarter levels. So as we get deeper and deeper and deeper into this, we would look for some monetization, but it's pretty ugly to the downside. So we absolutely have got to take this 38.50, 38.55 level, and we got to hold above that into the close today. If we can do that, that could give us a run up to 4,000. If we can get above this 39.15, 39.20 today, which we don't think is likely, but if we can get there, then that actually sets the 4,000 strike as being very viable. I will note the 3.52 takes us right up into that 39.40, 39.45 range. So again, a conservative value. We don't think we're going to get up there. You know, your crystal ball's as good as ours. Speaking of crystal balls, here's what we're looking at into next week. Very fat, very wide, very well-defined range. You can see pretty well protected to the downside. The net expiring next week is negative, which means more puts are coming off the table than calls right now, which again is that short-term phenomena that we're always looking at. Just note this is a weaker projection than what we were looking at yesterday. So the bulls really need to step up here, and they haven't been. They're losing this battle, but nevertheless, just be aware of what's happening here. And clearly, the 4,000 strike is the upside target for next week. This is the combo, and so we're looking at what are the major lines for next week. And if we can get more calls going in, we'll be in pretty good shape here. If we don't get those calls, then we're going to fail. And you can see just the dominance of what's happening here in both delta and gamma. This last slide, this is the wow. This is hugely grown relative to where it was yesterday. In fact, I had to go back and look at the data just to make sure that it wasn't a mistake. And when we see something like this, clearly the bulls are positioning for the 4,000 strike. So, you know, if you're a speculator, you might want to think of a spread, you know, the 4,000, 4,005 for next week, and see if that'll materialize out. You don't have to have it go to the 4,000 strike. You just need to have it make progress through. I will say the ability to make progress through is pretty easy because of the transition. We just need to get there. So if we can get above this 38.55, 38.60, you can see that the transition up to a 4,000 and even higher could be pretty significant. So, you know, opening in your paper trading accounts, of course, something at the 4,000 or, you know, say a 4,005, 4,020, 4,015 type of strike here could be a way to do something for a call debit or something like that. So play that accordingly. On the other side, I don't think we're going to go above this in the short term. So if you want to sell something up here too, you can certainly try to do that also, and play it accordingly. This was the other thing I was talking about. You can see the relative magnitudes of the downside are, we could bounce. We've been bouncing, but we could continue to bounce back and forth as speculators basically, move their puts around and do whatever. What we need to see is this entire structure down here start to relax. And one way that happens is obviously as we move up, gamma decreases, but also we need to see some of the puts go away and some of that speculator money start going over here into the calls, and you can see we're really unbalanced. So downside is hedged well. Upside is developed here on the 4,000 strike, but other than that, there isn't a lot to play on here. So that's it for today. Come follow us at GammaEdge. We got a great Discord, great group of people, always willing to work with folks and help understand what we're seeing here. Follow us on Twitter at GammaEdge with an S, and then here on YouTube, of course. Subscribe and smash that like button if you like today's content, so you give me immediate feedback that I'm providing you what you need. So make it a great Friday, make it a great weekend. We'll do some videos over the weekend, and we'll see you Sunday night in our open mic in the Discord. Thanks, everyone.